Everything you need to know about a home equity line of credit. It's our Money Monday with the University of Michigan Credit Union on Ann Arbor's Talk Station 1290 WLBY. Do you have a home with equity? Are you looking to do home improvements or repairs, wanting to consolidate high interest debt, or trying to pay for education? Well, a home equity line of credit, or HELOC, may be a great option for you. This financial product can have a lot of versatility with its uses, but it's important to understand how they work before deciding if it's an ideal option for you. Today, I'm joined by Kylie Marceau. She is a home equity and mortgage loan processor at the University of Michigan Credit Union. She's going to help us and give us all the details on how these loans work. Great to have you with us, Kylie. What is a home equity line of credit known as a HELOC?
Yes. Home equity line of credit, or HELOC, yep, just as you said, allows a member to borrow money using the equity in their home as collateral. So unlike a home equity loan where they'll lend a lump sum, a HELOC offers a line of credit they can borrow against when they need to. So like credit cards, the HELOC also comes with a variable interest rate, and the monthly payment will vary depending on how much they borrow at any given time and the current interest rate.
And that's something that's really important that people may not realize, the fact that it's a variable interest rate. You have to kind of build that in, right?
Exactly, yes.
To know it could change. Are you given a maximum amount that you can borrow? And what is that based on?
Yeah, so with the HELOC, you are typically given a maximum amount that you can borrow based on the equity that you have in your home. So equity can be defined as the current market value of your home minus what you currently owe. So once you close on the loan, you can also choose to use any or all of the line, and you're charged interest only based on the amount that you actually borrow. So if you haven't used any of your line, you don't actually owe anything on it.
Okay, so what are some of the advantages of a home equity line of credit?
So the HELOC normally lets you borrow up to 95% of your home's value, depending on the lender, minus any outstanding mortgage balance. You do typically need good credit to qualify, as well as provable steady income to repay your loan. The interest rates, while they do vary based on the LTV and your credit, that does usually mean that they have a lower interest rate, as well as lower initial costs over credit cards or personal loans, which makes them more attractive for debt consolidation, higher education expenses, etc., different items.
Now, is the interest tax deductible?
It might be, but I suggest people speak with their tax advisor or an accountant to find that out.
Okay. Now, I'm intrigued by the fact that you said, you can get a lump sum approved and it's there in your account, but you don't have to use all of it right away, right?
Right. So you can use funds as you need them. So where home equity loans and even personal loans require you to take out a lump sum, you can use the HELOC periodically, only borrowing the money you need as you go along. So if you wind up only borrowing small amounts of money, that's totally fine. That means you end up with a smaller monthly payment.
And generally, how long does a HELOC last where you're expected to have it repaid?
So HELOCs often provide flexibility in terms of how you pay them off. The timeline for a HELOC can vary depending on how much you want to borrow and the lender that you go with, but HELOCs typically last for up to 25 years, and you have lower payments during the draw period, which is also typically 10 years. And then you have the option to make additional payments during those 10 years to help lower the balance, so you have a smaller balance during the repayment period.
We're talking with Kylie Marceau. She's a home equity and mortgage loan processor at the University of Michigan Credit Union. By the way, our listeners can go to umcu.org and get more information on HELOCs. Are there any restrictions, Kylie, on how you use the funds?
No, there's very few restrictions on how you use the funds. Although the HELOC is secured by your home, you don't have to use the funds just for home improvements. So you can use it for, as I said before, higher education expenses, travel. You can use it for debt consolidation, anything you can think of.
All right. So finally, what, though, should we be careful of when we're considering doing a HELOC?
So being able to tap into your home's equity is a good option to have, but there are some potential disadvantages to it because you are using your home as collateral, because the home equity line of credit is a secured loan, meaning you're putting your home as collateral. So while having a secured loan can help you secure a lower interest rate, you are taking on an additional risk using your home as
All
that.
right. So what we learned today, just like any financial product, a HELOC does have its pros and cons. If you have enough equity, there's flexibility in what you borrow and when you pay it off. On the other hand, your home is secured with the loan, and HELOCs often have variable interest rates, meaning those payments could change, so keep that in mind. And it's important to consider what you need the funds for and your entire financial situation before applying for one. Thanks for the great information today, and this might be the perfect solution for people out there who would like to do some projects around their home, or they've got other needs where they need some money. A HELOC may be the way to go. And again, you can go to umcu.org for more information. They also provide financial seminars online every month. You may want to consider signing up for those free seminars. Our thanks again to Kylie Marceau from University of Michigan Credit Union. You're listening to Ann Arbor's Talk Station, 1290 WLBY.